Guys, what's up? Alec back with the daily stock market, and look at that. The entire stock market is falling. We have a big red day today. So let's put out the favorite video on the channel, and that's going to be the best call options to buy in September. We're going to go over a few different stocks that I'm looking at for call options, and then you guys can obviously make your decision on what you think the best one out of the bunch that I'm going to go over is. Remember, options trading is extremely risky, and this video is going to be more risky option trades as well. Some YOLO option trades are going to be in there. So let's get into it because I know you guys love my option videos. So the first one up is ticker symbol PENN, and football season is coming up. So I think they can definitely go higher. If we zoom in though, you can actually see they broke their previous resistance of 83 and they went to 84, but now they're coming back down a little bit. So we might want to wait for them to get back to 65 or at least to $75 per share before you take one of these options out. So what I would do is I'd press trade option, and I'm going to like October 15th or maybe even a little bit later. All right, and the first one that we're going to be looking at here is going to be this $95 call. It's only $200 for one of these. The $95 call is only $200. And I was also looking at this $90 call, which is only $300. So overall, these options are pretty good. They're only $200 or $300. Expiration date is October 15th. You're buying a call, so you're definitely bullish. You could even scroll over a little bit more, January 21st. And remember, if you have a higher budget, let's say $600 budget, this $100 call for January 21st is always going to be a little bit better if you go more into the money or if you go with a further expiration date. All right, so next up, we have a Lucid down to $18 per share, and it's getting pretty attractive for a swing trade at least. Remember, with options, if you don't want to be risky, you can always just swing trade these ones because you don't have the fighting expiration date that you're going to be fighting. So that's why I personally actually prefer to do heavier swing trades rather than option calls. All right, so what we see here is Lucid, their floor, or their support, I should say, is close to around $17, $18 per share. So it's getting very close to that support again. I think there's going to be a good option trade or a swing trade involved with Lucid, especially because it is a hype stock. So what I would do is go over to like November 19th, for example, and I would be looking at like the let's look at the 24 call or even the 25 call. It's only $133. It's down 23% today. So it could be a good time to take one of these $25 or $24 calls out. Remember, don't over leverage yourself with options. They're very extremely risky. You can definitely lose money. Make sure you set a stop loss also. And if you're going to take out 5 different contracts or 10 different contracts, maybe wait on a later option that I bring up in the video that's a little bit more expensive. That might be a little bit better than this $133 option. Also, make sure you're setting a stop loss. So if you're taking out a $133 option, I like to set a stop loss around 40%. So I would at least be getting around $75 or $80 back minimum from this option if you set your stop loss the right way. Now, if you believe in the cannabis boom, Tilray can be an interesting one to run options on. It is a little bit more risky out of this group of stocks, but remember, some of these are going to be YOLO options that you can make a lot of money on. So Tilray is definitely going to be brought up, and it was at $8 per share. It flew up, and then the new support is around $13 per share, and right now it's around $12.80 per share. So the question is, can it go lower? I would probably wait at least till $10 per share or between $10 and $12 per share. So you would press to take out this option. You would press trade option, and then this one we would go out a little bit further, okay? Because it could take a little bit longer for something like this one to pop. So what I would do is scroll to like this $22 call. It's only $120 per contract, the $22 call. If you have a little bit more money, then I would look at something like the $18 call, which is only $167 per contract. All right, expiration date March 18th. So you're going to be holding this one a while, at least to like February or January. You probably want to be holding this one until. And it's only $100, $126. You should definitely always be playing with a calculator if you're a serious option trader and understand how the profit calculator works. You know, if Tilray goes to like $25 per share, we can easily make like $300, or you can like 2 or 3x your money if Tilray ends up shooting up to like 20 something dollars per share in the next few months. Now look at that. Wish is down 7.2% on the day, which is a huge downward movement. Don't get that mistaken. Down 7% on the week, 30% on the month, and 53% in the last 3 months. Again, I think that this is a great one to start swing trading, especially when it's below $7 per share. I'm going to start loading up on shares for myself, and I'm going to press trade options if I want to be a little bit more risky. And we're going to be going to something like October 22nd or December 17th. And I like December 17th a little bit better. You can actually see I already took this option call out today. It's $7. It's a 7.5 call. Expiration date December 17th, so we still have some time, some good cushion of time. It's a 7.5 call. It's only at $124. I think the one above it is also pretty attractive. It's a good one. It's only $88. So if you're looking for one under $100, that's a pretty good one because it's expiration date December 17th. Usually if you're going $88, you have like a September 24th or October 1st expiration. So this one at least gives you a little bit more time to hit that break-even price. You know, all we need is this thing to go to $9.80 by December 17th, and I think it'll go to $9 way before December 17th. That's why I think it's a pretty good call option, one of these $9 call or the 7.5 call. Okay, so now let me go over one that's a little bit better for investors that have a little bit more capital, and that's going to be Visa. So far we talked about a lot of cheaper ones, YOLO ones. This one's a little bit more safer and a little bit more expensive. Okay, now Visa's down 5% in the last month. It's also showing some positive confirmation that it's going to come back up. And if you look at the last year, it fell down, and every time it falls down, it comes back up. It's Visa, the largest credit card processor in the entire world. If we go over, we would just have to look at like October 22nd on something like this one. Now, I was looking at these call options last night, and they were significantly cheaper. You know, they're up like 35% today, 40% today. Well, that does pain me, but the good thing about these options, they are actually risky. I should take back when I said they're a little bit safer, because if you look at them, you know, these options are going up 35%, some of them even going up 50% when the stock price has only moved 1.25% on the day and was up 1.5% also. So if Visa, you know, recuperates that $5 loss they've had this past month and goes back up to $250 per share, or even like $240 per share, that can be a 5 or 6% movement in the stock price, which could have these options, these call options, going absolutely crazy. Okay, so the $235 call is the one I'm looking at, $340 per share. But if you have a little bit more money, then the $230 call is even better than that. And the $225 call is even better than that. And that one's only up 28% on the day. So you're getting a little bit better of a deal because the $235 call is up 40% on the day. But that one is a little bit more volatile. It reacts to the stock a little bit more. So the faster the stock goes up, the more money that you'll be making with the $235 call, or at least more percentage gains that you'll be getting, I should say. So that's going to be a good one. I'm actually going to be considering taking this one out very heavily. It's $340. It's not that much. I'm going to put around a 40% to 60% stop loss on it. So 340, I'm going to be expecting to get back at least $170 to $200 from the 340 minimum. So I'm really only risking like $150 when it comes down to it if you put your stop losses on the right way. So let's talk about two more options and then we'll finish off the video here. So the first one's going to be Skills, down 8% on the day. And we all know what's going on with Skills, down 52% on the 3-month chart. Here you can see it looks like they're heading back down to around $10 per share. So if they go down to $10 per share, I think that this could be a great time. Or even if they go down to like $11 flat, or even under $11, I think it could be a good idea to take out these options. Obviously, these are YOLO options. These are extremely risky options because, you know, Skills has been beaten down so much in the past. But if we give it some time to actually pop back up, like December 17th, for example, I think this $15 call for Skills on December 17th is actually fairly good. It's only $140. If you want to go a little bit cheaper, you can go to this one right here. This 17.5 call is not much different. It's only $100, so it's not like you're risking the end of the world or the thousands and thousands of dollars for this contract. You're giving it till December 16th. You're looking for it to go to around $15 per share. And if it goes to $12, $13, $14 per share in the next few weeks, you can make some quick money and get out of Skills. And the last risky call option that we'll be talking about for today is Smile Direct Club. Most of you guys know this one as well, down 45% in the last 3 months. We're looking for this stock to pop up in the next couple months. We'd press trade option, go to probably something like October 22nd, right? So we're buying a call, and we're looking at probably like these $6 call. You're looking at this 5.5 is a good one, even the $5 call. So anywhere really between the 6.5 and the 4.5 call are all pretty good option calls, and they're extremely different. So if you want to go in the middle, I would probably do like this 5.5 call. All we need is for it to go to around $6 per share, which is absolutely nothing, and we have a few months for this to happen. It's only $78. So if you guys appreciate me doing these cheaper call options, so some of the beginners or people who don't have thousands and thousands of dollars can still participate in these call options, make sure you subscribe with post notifications on, and I'll do more cheap call options for you guys and cheaper stocks in general, because I know a lot of people like those cheaper stocks. Make sure you understand the risk. Hit the like button on the video, and if you're not following my crypto page yet, make sure you just drop a follow on it if you're interested in cryptocurrency. I put exclusive IGTV videos out 3 times a week that will only be found on my Instagram page for cryptocurrency. So if you like cryptocurrency, make sure you subscribe, share this video with a friend, share my crypto page with a friend if you think that they can find some value in it. If you also want weekly call options, make sure you join my close friends list on my stock market page. I actually post exactly what I'm buying every single day on the daily stock market on my close friends list. And I post at least 1 to 2 options that I'm getting into every single week as well. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.